We had the rand hit a session trough yesterday, 748.25, and that before recovering to around about the 738 mark, down to the euro pretty much, and calm having returned to the markets for now.
Indeed, we did see that rand base lost momentum at about 7.47 level on the back of the fact that the ECB, the Fed, the Bank of Japan and the Swiss National Bank together collectively said that they would extend 3-month loans to European banks to try and prevent the European sovereign crisis from morphing into a liquidity crisis. And in the wake of these comments, we saw risky assets really recouping some of those losses. And if we do see global sentiment continuing to improve, we could see a retracement of the rand back to 727. We do, however, still argue that the underlying tensions in the global economy and in the Eurozone is really enough reason to sell into rand strength in the medium term. However, today there's very little in terms of market moving data coming out, both locally and abroad. So we do believe that the rand could possibly trade in a fairly narrow range of about 727 to about 747.
Narrow range for today, but one would assume that volatility is set to be the name of the game moving forward, Shireen, in a context where, yes, we've had comments around this coordinated effort coming through from finance ministers in the Eurozone, but there's no hard and fast plan in terms of how to resolve the Eurozone's debt situation.
Indeed, no hard and fast plan, and still going to take quite some time before we actually get a resolution coming through. Finance ministers are meeting in Poland today to discuss that. So the comments that came out of yesterday from those central banks possibly may have moved the market slightly, but we do expect that it's going to take some time before we see very concrete resolutions coming through. But as you mentioned, volatility levels have been quite robust and very erratic over the past couple of weeks. If you recall, in August, for instance, we had very erratic movements in the VIX volatility index. And it's really an indication of what's happening in the global economy. So we can't really pin it down to economic data that's coming up. Yeah. In fact, the very soft data coming out of the US markets didn't really have an impact. But it's more about concerns about global growth that is likely to cause that volatility levels to be as erratic as what we have been seeing.
Taking a look at a local factor, comments out of our own Reserve Bank. We had Reserve Bank Governor Job Marcus yesterday ruling out aggressive foreign currency intervention to weaken the rand, saying that there are no guarantees, of course, that such steps would work in the first place. Market reaction to that kind of commentary that's out there, where we know that it was aggressive foreign reserve accumulation that helped cap rand strength at the start of this year.
Indeed, precisely correct. But the Governor Marcus has indicated that FX intervention is not going to really have much of an impact. Local manufacturers, as we mentioned yesterday, are calling for a weaker currency, but it can't just happen with FX intervention. We can't really address the issue of competitive prices just with local intervention. In fact, yesterday we saw the rand strengthen as opposed to weakening. So it's very ironic about the fact that they want to have the currency weaken. In fact, we did see Governor Marcus indicated that if they do put a ceiling on the currency, we could have the unintended consequence of inviting speculation into the FX market, and I think they purely want to avoid that as well.
In terms of factors to watch today, you did say that it is a quiet day. We are looking forward to the European finance and central banks bankers meetings in Poland, but let's divert some attention at least back to the US because we've got the Michigan consumer confidence data being expected on that front. Your broad expectations there?
Broad expectations, I think we could see some kind of improvement in the numbers for September. If you recall, in August, as I mentioned before, volatility levels were really very erratic, and we saw risk aversion come through quite starkly in the markets, and really on the back of fear and really obliterated reason completely in August. We do expect some calm to have come into the markets in September, even though those concerns about the US economy's growth and the recovery prospects are still there. We do see some kind of further sentiment being improved in September. So we do see a very, very slight movement up to about 56.9 points for this month.